Okay, next. The next 6 questions in relation to investments in associates. As noted in the syllabus, for May 2022 or for May 2019 syllabus na effective hanggang this May 2022, okay, ang focus nga ng questions bukod doon sa peculiarities at saka sa reporting requirements ay yung accounting for debt and equity instruments. Kaya kung napansin mo dyan, yun ang focus nitong mga problems natin. Okay. And in relation to investments in associates, ito yung difference. Okay, can be measured at cost unless there is a published price quotation. Pag may published price quotation, hindi pwedeng cost. So fair value must be used. So equity method is optional. Kaya effectively, ang investments in associates pwedeng at cost, pwedeng at fair value, pwede rin naman equity method. Yun nga lang, kapag may quoted price, hindi pwedeng gamitin ang cost. Okay, so yung equity method is optional. So kasi matrabaho, di ba? Yung equity method na yan. So in full PFRS, which is PS 28, no choice required gumamit ng equity method. Okay, now, how will the method affect the amount to be recognized in the balance sheet and in the profit or loss? So yun yung focus naman itong number 23 to 28. Yan. So accounting for investments in associates. Okay, so given are the following. So actually, there are 3 investments. B, C, D. Acquired on January 1, 2022. So 25%. So same lang yung quantitative presumption. Okay, so at least 20 with significant influence. Less than 20, no significant influence. So ito yung purchase price of B, C, and D. Transaction cost, 1%. So given yung dividend information sa letter B and C. Given yung profit or loss, okay, in letter D. Notice, wala daw published price quotation. So since published price quotations do not exist, the entity may use cost method. Okay, or the cost model. So given dyan yung fair value using appropriate valuation techniques. Cost to sell, 5% of the fair value. Okay, the first question. If the entity measures its investments in associates using, take note, cost model. Pwede ba ang cost model? Yes, kasi yung published price quotations do not exist. Kung merong published price quotation, bawal ang cost model. So dapat naka-fair value. Okay, so for your convenience, meron ka dyang solution guide. Okay, refer to the solution guide for your convenience. So this one, partially completed na yung solution guide. Okay, the requirement, carrying amount using the cost model. Okay, under the cost model, the investment initially at cost. At pag sinabing cost, kasama doon yung transaction cost. So purchase price, ito yon, yung purchase price nasa letter A, 10 million, amounts in millions by the way, amounts in millions, 10 million, 15 million, 28 million. 1%. So times 1%. So transaction cost 1%. So kasama sa cost yung tinatawag na transaction cost. So incremental cost yan, directly related to the purchase of the investment. So total cost. Okay. Now, under the cost model, dividends considered as income. So no effect on the investment. Share of profit or loss not recognized. So no effect on investment. Okay, so kaya lang, under the cost model, the investment is subject to impairment. So yung concept sa impairment in PAS 36, so same lang yung concept sa SME. So when is the asset impaired? When the carrying amount. And in this case, ito yung carrying amount before impairment. Okay, so an asset is impaired when the CA exceeds RA. At ano nga ang RA? Higher of fair value less cost of disposal. So kaya nandito, cost to sell. Okay? And yung value in use. So dito hindi given yung value in use. So kaya ang gagamitin nating RA dyan, yung fair value less cost to sell. So ito na yung carrying amount. So i-compare natin dun sa recoverable amount, which is fair value less cost to sell. So given in letter E, let's compute. So using appropriate valuation techniques. Okay, so investment in B, 13 million minus 5% times 0.95. C, 29 million. Okay, so 29 million times 0.95. Fair value less cost to sell. And then D, 15 million times 0.95. Okay, fair value less cost to sell. Compare. The asset is impaired when the CA, ito yung CA, exceeds RA. And yung test for impairment individually. So hindi siya by total kasi magkakaibang investment yan. So for investment in B, not impaired. Investment in C also not impaired. Investment in D impaired. The CA exceeds RA. Get the difference. So 28.28 million minus 14.25 million. The difference, impairment loss. So at December 31, 22, using the cost model, okay, entity B at cost, C at cost, D at fair value less cost to sell at recoverable amount. Get the total. Okay, investment in B plus C plus D. Total. Number 23, delta. Okay, 23, delta. 24. Okay, if the entity measures its investments in associates using, again, cost model, the requirement this time, profit or loss. So, ito yung carrying amount. Yan. So, ano naman sa P&L? Let's summarize. Under the cost model, dividends treated as income. So, letter B. On January 2, 2022, entity B declared and paid dividends of 1 million for the year ended 2021. So, dividends ito ng 2021. Dineclare at binayaran ng 2022. So dahil 2022 lang dineclare, income lang yan in 2022. Okay? So kahit pa yan ay galing sa 2021 earnings. So again, wala nang distinction ngayon. Even sa full PFRS, walang distinction yung pre and post acquisition RE. So ganun din sa SME. So it doesn't matter kung galing yan sa earnings before or after acquisition. So yung dividends na yan dahil declared ng 2022, income yan in 2022. 1 million times 0.25. Okay, ito namang si entity C, nag-declare ng 2022 December 31, payable 2023. So dahil na-declare na yan in 2022, income na yan. So that is 8 million times 0.25. Walang declaration si entity D. Okay, and instead of income, ang ire-report related kay D ay loss. Impairment loss. So in relation to B and C, dividend income. In relation to D, impairment loss. So net amount in P&L. Okay, net loss, net expense. So number 24, letter A. Okay, 24, letter A. So again, since published price quotations do not exist, pwede nating magamit yung cost model. Okay, so again, for convenience, yan, cost. Now, 25, this time, equity. Again, the use of equity method is not required. It's optional. And using equity method, number 25, carrying amount. So let's compute equity method CA. Again, for your convenience. Ayan. So sana ganyan sa exam, no? May solution guide. Okay, at yung initial amount at cost provided already. Ayan. So cost includes transaction cost. Ayan. So initially at cost. This time, share of profit or loss recognized. So ito yon, nasa letter D. Okay, so entity B, 5 million times 0.25. Share of profit of associate or investment income. Okay, so this one. Entity C, 18 million times 0.25. However, entity B recognized a loss of 20 million. So share of loss of associate. Okay, 20 million times 0.25. Loss. Okay, add share of profit. Deduct share of loss. So investment in B, share of profit. Investment in C, share of profit. Investment in D, share of loss minus. So, equity method. Okay, dividends not considered as income but deduction from investment. As noted in number 24, dividends received, entity B. Okay, entity C. D, no declaration. Okay. CA, before impairment loss, using equity method. Okay. Cost plus the SOPA minus the SOLA minus the dividends. So, carrying amount. B, C, D. Okay. So, cost model and equity method subject to impairment. So, kaya lang, instead na cost, ito na ngayon ang CA before impairment. Diyan natin i-compare yung fair value less cost to sell. And as noted earlier, ito yung na-compute natin kanina, fair value less cost to sell of investment in B, C, D. Now, compare. B, not impaired. C, also not impaired. D, impaired. Okay, get the difference. 23.28 minus 14.25. Loss. Okay, so instead nga lang na cost, dito na natin kinompare sa carrying amount before impairment. Okay, so at December 31, 22, okay, CA of investment, B, C, D. Get the total. Investment in B plus C plus D. Okay, carrying amount using equity method. Total, 25. Bravo. Okay, 26. Same method, this time the requirement. How much in profit or loss? So using equity method, how much in P&L? Get the net amount. Okay, this one. Share of profit, B, C, minus the share of loss, D. What else in P&L? This one, impairment. So get the net amount. So share of profit, B and C. Share of loss, D. Impairment loss, D. Okay. So net amount in P&L. Number 26, letter A. So ito yan ha. This one plus this one minus this one minus this one. Amounts in profit or loss. Okay. So again, that's the inconvenient method, equity. So it's not required. So it's optional. Next, 27. This time, using the fair value model, the requirement, how much in profit or loss? Again, for your convenience, the solution guide. Isa-summarize natin yung income and expenses in profit or loss using fair value model. Now, under the fair value model, the investment initially at fair value, which is normally the transaction price. Okay, transaction cost expense. So 1% of the purchase price. So B 10 million times 0.01. B 15 million times 0.01. D 28 million times 0.01. So yung transaction cost na yan, expense when incurred. So expense when incurred. Okay, as noted earlier, the dividend received, the dividend receivable, dividend income. B, C, D. Dividend income. Now, under the fair value method, okay, no impairment. Instead, recognize changes in fair value. So, let's get the fair value adjustment, gain or loss. Ito yung purchase price. Ito yung carrying amount before adjustment. Okay, ito naman yung fair value. Do not deduct cost to sell. Okay, in computing fair value adjustment. So, B, okay, that's 13 million. Ito yung 13 million. Minus yung purchase price na 10 million. Again, yung transaction cost dyan, expense. Okay. So, B, gain. C, fair value, 29 million. Okay. Purchase price, 15 million. Okay. C, gain. D, fair value, 15 million. Okay. Purchase price, 28 million. So, 15 less 28, loss. So, B, gain. C, gain. D, loss. So, the share of profit or loss not recognized under the fair value model. So net amount in P&L, B, C, D. Okay, get the net amount. So B, C, minus D. So using the fair value model, net amount in profit or loss. 27, letter A. Okay, 27, letter A. 28, again, using the fair value model. Okay, the fair value method. Question, carrying amount of the investment. So under the fair value model, the investment carried at fair value. At ito na yung fair value. Do not deduct cost to sell. So ito yung fair value. Get the total. So B, C, D. Total fair value of the investments. So that's the carrying amount. Do not deduct the cost to sell. Total. Number 28. Letter A. Okay, 28. Letter A. Okay, now to summarize. So refer to the solution guide again. Ito yung summary. As noted in number 23 to 28. This one. Amount in the statement of financial position. Net amount in profit or loss. Okay, so again so the method used will affect the amounts to be recognized in statement of financial position and profit or loss. Okay, again, take note, yung cost model, pwedeng gamitin yan kapag walang published price quotation. Pero kung may published price quotation, okay, hindi na pwede yung cost. It's either fair value or equity na. And notice, ako personally, ang gagamitin ko dyan, fair value model. Kasi pag fair value model, very easy, very convenient. So ang investment, lagi lang naka-fair value. Tapos kung may changes in fair value and other expense, income and expenses, profit or loss lang. So notice, okay, negative sa cost and equity, positive sa fair value. Kasi pagka fair value model, nagre-recognize ng changes in fair value na hindi nire-recognize under cost and equity method. Now, yung investment dyan sa problem ay investments in associates. Now, what if instead na associates, sinabi dyan, yung investments pala na yan, joint ventures. Lagyan ng note. Same answers if the investments are joint ventures. In particular, jointly controlled entities. So yung accounting sa jointly controlled entities and investments in associates, the same. Kaya kung pinalitan yan, ginawang joint ventures lahat yan. So same lang yung answers. Incidentally, a problem similar to that given in AFAR. Pero hindi pala AFAR. P2 pa ang tawag dati. So nung 2010, nung binigay ito sa board exam, yung SME. Okay, so ang problem similar to that pero instead na associate, joint venture. So same lang yung answers. Okay, so by the way take note, yung section 15, investments in joint ventures, ang naging reference dyan, yun pang lumang IAS 31. So that's why sa SME, tatlo ang klase ng joint ventures. May JCO, merong JCA, and jointly controlled entities. So dito applicable yung similar to associates. Yan, yung jointly controlled entities. Now, anong kaibahan sa full IFRS? Okay, in full PFRS, ang tawag na joint arrangements. At ang joint arrangements, pwede siyang joint operations. So ang ina-apply PFRS 11 o kaya joint ventures. So ang ina-apply naman 28. Okay? So effectively yung JCO at yung JCA parang naging JO. Tapos yung JCE, yan na yung naging joint ventures. So ngayon, ang joint venture, ano na lang, one form of joint arrangements. So ang joint arrangements, pwedeng JO or JV. Yan. So yung accounting dyan sa JCE, same lang sa associates. Okay. Next, number 16. In relation to investment property. So anong kaibahan niya sa PS40? Okay? So in other differences, pag-uusapan natin yan later, after a short break. Short break ulit.